Hi everybody, Russell here from VectorVest. Let's get right into it. So the first thing I want to do here, to get to market timing, a very quick way to do it, if you click on the timing, right, it's the timing tab over here where it notes market timing graph over there, and you fire it up. You'll see over here my graph layout, I've automatically selected it to be VectorVest MTI layout. You might have a different layout, but that's how you do it. Put the VectorVest MTI layout, and what I'll do is I'll minimize this so I can get maximum screen here if you prefer, or you can have it on the side here so you can see the different indicators here. I'll leave it here for now, and what I'll show you over here is this is our MTI, our market timing indicator for Australia. So the underlying trend of the market, if the MTI is above 1, the underlying trend of the market is up, and if it's below 1, the underlying trend of the market is down. Now you'll see, go back in time, MTI has been above 1 all of this time, apart from, if we have a look over here, 0.99 on the 24th of September. We come in over here, there we are, 0.99 again on the 29th of October. And let's see, the next date there, the 30th of October, was below 1. 2nd of November, move it over here, all the way through until, and then it broke back above 1 again here at 103. On the 5th of November. So apart from a few days, the MTI is being well above 1 apart from those few days there. Turn off the buy to sell ratio for now, just concentrate on relative timing. So this is the short-term price momentum for the market. And you'll see the technicals have been booming for the market, apart from just one day there where relative timing went below 1 on the 2nd of November. Apart from that, relative timing has not gone below 1. Now if I look at the buy to sell ratio, that's the number of buys versus the number of sells, you'll see here that the buy to sell ratio has pretty much been above 1 most of the time, apart from a few days here or there. Okay, the buy to sell ratio, I do not get too hung up on the buy to sell ratio here in Australia, because we do have a lot of smaller penny type stocks in the mining industry, for example, which can impact on the buy to sell ratio. So the key ones I'm looking for here in Australia is MTI and relative timing, and you can see both MTI and relative timing have been in the right direction, holding up for quite some time. It's encouraging to see as well that the buy to sell ratio is still holding very steady here at 1.58 buy rated shares to every 1 sell rated shares. So it's telling us that there's more buy rated shares relative to the sell rated shares. Remember that buy rated shares, VST above 1, RT above 1, and price diverging away from that stop line. Okay, so having said that, I know there's talk out there, market commentators saying, well, you know, this market's likely to crash, you've got to be careful, the doom and gloom type articles. Just be careful on that, because as I was pointing out at the VectorVest Online Investment Club the other day, look at that. If I come in over here, I'll just tidy this up just a wee bit over here, just make it a little bit easier to see. And I'll change the style over here. So I've just drawn in a line from the prior high point to where we are now. Look at that, we're yet to break through the prior high. So we covered this in a essay just a couple of weeks back, but let's load up America. So let's bring the US across, and same deal. I'm going to go on to timing. So there we are. And click on market timing for the US. And I'll change the layout to being a VectorVest MTI layout. This is interesting, and that's our prior high, prior to the coronavirus market sell down. Hard to believe because it looks so low now relative to where the market's run in the US, but look at that. So Australia's got a lot of catching up to do relative to the US. US is smashing through prior highs. There we are, look at that. And if you then compare it to Australia, we're yet to catch up to our new high. So I believe the market yet has got some room to move yet, right, relative to the US. But we can't predict, we need to read what's in front of us. So we're seeing all the positive signs, but we need to also pay attention to earnings. Is it due to the fact that earnings across some of our key companies are not firing relative to where they were prior to COVID-19 market sell down? Well, let's investigate and do a bit more work. So what I'm going to do here is I'm going to go into viewers. So the way I got to this here, make sure of course you've selected watch lists, right? So viewers home, and then you've got a watch list viewer. So you either click watch list viewer, or watch list viewer here, whichever way you prefer. So let's click this one, for example, and here we are. So I'm going to scroll down to S&P ASX, and I'll open up the 200, the S&P ASX 200. And what I'll do is I'll minimize this here so you can see all the different columns here. If I right click, I can auto fit all columns, make it nice and neat. Not all these stocks are going to be top earning companies. Just because in the ASX 200 doesn't mean they're going to be good earning companies. If I come down to the bottom here and I right click and I view the watch list average, right? So the watch list average down here, right click anywhere here, view watch list average graph, and I bring on the earnings. You see over here, I was covering this in the investment club just the other day. The overall ASX 200 is firing up, but look what's happening. The earnings are having quite a big breather. Right, dividend yield at about 2% on average. You can see the earnings have sort of come up and now they've come back down again, so that's a concern. Falling earnings will lead to falling share prices. We've got to be careful as investors. What we're going to do here is we're going to pick on the ones with the top earnings and weed out the ones that have the bad earning profiles. So how about this? I'll come back to the S&P ASX 200. What I'll do here is I'll right click and I'll select copy. How about that? Make a copy, because once you make a copy now you can modify it. You can't change the template, but you can change the copy. So here we are, copy of ASX 200, and we can have a bit of fun and weed out the ones where the earnings are growing. So coming along here, let's go and pick on this indicator here, GRT, earnings growth rate. We want to buy into those companies with positive earnings growth rate outlooks, right? So GRT there. If I come down here a little bit, let's remove anything. Let's have a cutoff point, anything below 10, let's say. All right, because we can afford to be fussy. We've got a few here. So there, I'll click on the first one. I'll scroll all the way down to the bottom, hold my shift key, click on the last one here. That's negative 12. And I'll then delete the selected stocks. Okay, there we are. So straight away we've taken them out. Now I don't know about you, but these are jumping out at me as well. Sell rated. So let's click on rec. And let's scroll up here and remove anything where it's S, sell rated, right? So depending on whether you want to set it, in a ascending or descending order, right? You just want to classify them. So you click on the rec button here, you can get your buys coming to the top list. Now you can get your sells to the top of the list. So same deal. I'll select all the sell rated ones here and delete selected. So I've removed all the sell rated stocks. I've kept the buy or hold where the earnings growth rate is positive. Let's go and have a look now. So we've got 36 out of the 200. Let's come to the bottom here, right click, view watch list average graph. Aha, much better set of earnings here, thanks to the power of that GRT indicator, earnings growth rate. There you go. So of the ASX 200, here are the ones that are starting to jump out, from which you can then start to refine further. So straight away, instead of having to waste your time through 200 odd stocks, you've sped it up dramatically with just a few clicks of your mouse, and now you're ready to start taking it to the next level. You've done a bit of a shortcut there to 36. And then in here, what you can come and do over here is you can then weed out anything that's significantly overvalued. If you're more conservative, weed out anything where you have a weak VST score, for example. So let's see the lowest VST score here. Here's a couple where it's below 1. So let's take those ones out there. I took one out, there was just slightly over 1, but anyway, it doesn't matter. I've weeded out the bottom 3 VST scores. Let's refine it just a wee bit more. Come back over here. Let's see, RS, relative safety. And let's see, any stocks where the relative safety is below 1. Again, I'm just being very fussy here. Let's take those ones out. All right, so I'll take those ones out where RS is below 1. So we're down to 20. And let's see, CI, the comfort index, looking for the smoothest left to right price patterns. Where are the weakest ones here? Well, 1.11, still above 1, that's okay. So I'm happy with that. What about RV? Upside potential there. And let's have a look, any low RV scores. All right, so these 3 here where the RV is below 1. I'll take them out. 17 in total. Let's sort it by VST again. There we are, breaking it down to 17. Let's go to the bottom, view watch list average graph. There we go, pretty good, right? Earnings are coming off just a wee bit here. So the final step I'll do to refine this is just to go and take a bit of a sneak peek at the 17 stocks here. So let's graph all, and let's just weed out where we see anything where the earnings profile is starting to let us down. Wow, look at that. Fortescue Metals been an absolute stellar performer. Just coming off slightly. Is it enough to warrant us to remove it? Let's see. Is there anything that jumps out where the earnings are really starting to go south? Well, APE. So you jot that one down. So just a quick exercise here. This one here's gone sideways. It's okay. So it's just starting to fall away quite sharply here in recent days. Look at that. Just starting to fall away. So Sonic Healthcare, SHL. I'll just jot that one down there. It's got to really jump out. This one here is coming off quite a bit. Sort of leveling again. It's up to you. I'll be a bit strict and say take that one there out. And there we go. All right, so I'll just identify those ones there. APE. The other one was SHL. All right, and SHL, there we are. And the other one identified was ANN. All right, so there we are, ANN. Let's delete those, take them out. And of course, you can refine this and make this much better. I'm just showing you just how quick and easy. I've done this just in a couple of seconds. Right, click down the bottom line again here. And there we go. All right, so haven't quite been able to smooth it out perfectly, but still pretty good. You might just want to spend a wee bit more time just refining that. I'm pretty happy with that. It's not a big pullback. It's just a bit of a breather. I'll need to watch it closely. There you go. So the power of Activest in just a few seconds there. Buy into those rising earning companies, right? So those companies growing their earnings in a rising market. You're setting yourself up for success. There's a quick and easy way to do the ASX 200 in just a few seconds. Hope you got a lot out of it. Until next week, bye for now.